Hey, how's it going? Right now I want to talk about the Fibonacci tool. So we're going to be using this tool and we're going to use the dollar yen as our example. Here we have the dollar yen for our chart. So you go and you get the tool and we'll just use this as the first test here. So here I've already put it. So the first thing that I identified here, I didn't quite explain that. I first identified a high and a low. So I first identified this low and then this high. So I've seen that price has been moving for the past couple of days in a sideways range, and then it broke out of the range, and then it's made a high, and then it dipped. So we're looking at this area of price action, just this trend here that we have over here. So this trend broke, but we're looking at this low and this high. So I'm going to get the Fibonacci tool, and then I get it from the high to the low. So what is happening here is that this tool is showing us the thing that is happening on a chart. So the things to note, let's use this rectangle here. So the things to note is that we have a low here and this is where our Fibonacci tool started from. So why didn't we use the body? In some cases you'll be able to use the body instead of the wick, and if you do that then you have something that looks like this, which could still be of help. But I used the wick because all of this was money being made. So you want to also consider that. But there are no rules written on stone. You could choose to use the body depending on your level of discretion. But I do recommend that you use the wick because that is also showing you some useful information. So on the Fibonacci, you're going to see that we have all of these different numbers here. So we have the 61.8, the 50, the 38.2, the 23.6, and the 0. And we have the 100. So the first 2 points that we first engage are the 0, which is at the bottom, and the 100, which is at the top. So this is 100% of the impulse wave. This is 100%. This is 0, this is 100. So what this tool does is that it shows you the retracement and the extension. So first we're going to talk about the retracement. So we have 0 and we have 100. So all of these digits we have here at the edge, all of these digits here, all of them are numbers that are falling between 0 and 100, right? Not this one, but all of these ones, they are falling between 0 and 100, which means that they are sired by this wave, this low and this high. Everything that falls in between will fall at a golden, at a Fibonacci point. So the Fibonacci tool helps you to track levels of support and resistance. This is a tool that helps you to find these zones so that you can place a trade. So you're looking to place a trade at one of these areas that are highlighted here as a retracement. So price will move in impulse and retracement waves. So it's very important for us to understand the movement of price, and let me illustrate that using this. So you see that price has moved up, okay? Let me get rid of this for a second. All right, I hope you can see this trend line very clearly. Let me just make it thicker. All right. Wow, it's real thick. All right, so we can see that price has moved from this area to that area. All right, and then it's also moved from this to that area. All right, it's a bit dark. And then in all of this, price has moved from here to here again. All right. And after this happened, price also came back down, moved again like this, and then so this is just how price moves. We're just tracking the movement of price on a chart. So this is very key in understanding how to use retracements and extensions in the Fibonacci. So when you're tracking price, you're not actually gonna draw all these trend lines, of course, but you're gonna see them visually. But what we have is that we have price moving in two directions at the same time. You could argue that it's three directions, but it's moving up, right? This is moving up, and then it moves down, and then it moves up, and then it moves down. So when it moves up, or when it moves up in this case, we can see that price is in an uptrend. If we drew this trend line here, we'd see that price is in an uptrend because it's on the top side of this trend line, not the bottom side of this trend line. So trends are explained in the video on trends, all right? So here we have this surge of movement. So price oscillates. It goes up and it goes down. So it's sort of like breathing in and breathing out. Breathing in, breathing out. So at the end of the day, what ends up happening is that price ends up making these V shapes. So if you look at this, you know, like just disregarding the minor waves, you see that it makes these V shapes. And then you can see that this is another V shape here. If you use this, then you use that, okay? So this is another V shape. So all along, price is moving in a certain direction, but while it's going in this direction, it goes up and it goes down, all right? So this is important for us to understand as a basis of using the Fibonacci tool. So when it's going up, we call this an impulse wave, and then when it comes back down, we call it a retracement or a correction. It goes up, it's an impulse, and we have a correction or a retracement. So when we're using the Fibonacci tool, what we're looking for are retracements and extensions. So this tool is going to help us to do just that. So we go on a chart, any chart, and any time frame actually, and then we find a low, we find a high. Okay, so this is what we've already done. So there are two ways that you could do it. You could do it like this if you put the 100 retracement at the bottom and the 0 retracement at the top. You see that when price is moving, what you want to track is the movement of price according to the retracement. So if you put it here, it means that this is the 0 and this is the 100. So in this shape, the Fibonacci tool should be showing you a downtrend. So in an uptrend, we have to flip it the other way around. But before we do that, I want to show you that this area is the 38.2 area, right? As you can see, this is the 38.2 area, and you can see that the previous price action has confirmed the importance of this 38.2 zone. All right, so here I was putting this Fibonacci tool, and it's showing 100 and it's showing 0. But the correct way that we want to put it is to first put it at the high. All right, so we get the tool, we first put it at the high, and then we drag it to the low. All right, and then what we have is that now we have 100% retracement is at the top, the 0 is at the bottom. But the same thing has happened in the sense that this area is still being highlighted. So in some cases, it won't really matter if it's up or down. What's important is finding a trade that is viable, okay? So this area is the 61.8% area, okay, as you can see. So you should know that this 61.8 zone is actually the same zone as the 38.2 zone. This is why we're able to find the same zone, even though the tool was being used in the opposite direction. So this is the same zone, just different applications of the tool. So in terms of what's happening in below the 100% zone, we call this the retracement. So as we mentioned, that price will move up and it will move down and it will move up again. So when we use this tool, we're trying to find a place where price is going to bounce, because it moves up and then it moves down, right? So when it bounces, it retraces. And when it retraces, it's supposed to move from a Fibonacci zone, such as this one. This one would be a great zone because it also goes with this area of support, which used to be resistance. So this is a great area to place a trade based on this Fibonacci zone. So you place your trade here, and then you anticipate that price will continue to go back up, okay? So that you want it to bounce up, so that it retraces, and then when it's retracing, it's moving down. So when it retraces, you can say that price has retraced to the 61.8%, which means that it has retraced 38.2% from this high. This is actually it retracing 38.2 at this zone. All right. So when price hits this area, which is the golden ratio, which is the same as this area, the 38.2 area, you're looking for it to bounce and go up. And when it bounces and goes up, so the moment that, so this 100% zone shows you the middle line between retracement. So all of the retracements happen in this zone of the tool. All of this is all retracements. So if anything happens in this area on this chart, then it's actually a retracement. All right, fine. I'm not going to shade the box. I'm sure you can see it. So all of these are retracements. But the moment that price goes beyond this zone, it's called an extension. Okay, so these areas. So in terms of extensions, we have these areas. Actually, there are more. All right, so we have all of these areas, but we're gonna just focus on the first two because they're visible on the chart, on our chart right now. So this is the 127 zone here, this one, and this one is the 161.8 zone. So all of these are extensions. So this means that price has extended from this zone to that zone, and it retraced, okay? So it retraced, which means that it got back some of the movement of this area. So this would be a calculation of from here to there. This is our 61%. So price bounces at 61% of this entire movement, of this low to this high. Price comes back to the 61% area, which means that it actually takes 38% of the movement when it comes to this area, and then it extends beyond that to another zone. So this zone would be 100% plus 27.1%. This is what we have here. This is 27% off from 100%. So it extends there. So the key area that would want to take profits is usually the 161.8%, which is the same as this one. So this is how you use the tool. This is how you use the Fibonacci tool. So you use it as extensions, you use it as retracements. All right, let's just go into this chart again so that we can see some more information. All right, so here we have a trend. All right, let's see if this tool is able to show us the information that pertains to this trend. All right, so we're trading here, right? And then we get our tool, we find our high, we find our low, we put the tool there. Great. And this is what we've got. So price came, this is 100%, all right? And then it came and, all right, so this is just a horizontal line here. All right, so in fact, let's use this low and this high, which is pretty much the same, but this gives us more information. So we use this low and this high. So there was a previous double top here, okay? Actually a triple top. So this is the area of interest. So price came back and it retraced the golden ratio. So this place is called the golden ratio for a reason. And the reason is that when price comes to this 61.8%, which is the same as the 38.2%, it means that price is bouncing up. Usually it's bouncing up. So you'll be looking for it to retrace not more than 50% in most cases, but coming to the golden ratio is what you want to wait for. And when you do that, you're looking for it to extend, and you see that price came to the 127% and it bounced at this area, and it actually fell, retraced the previous Fibonacci zone at 100%. This is the candle that we have. So in most cases, you'd actually want to trade this even here if you're not already in the trade. But the sweet spot that you'd actually enter the trade at is here. So you'd be not there. So you'd be here, right here. So you'd be one of the first people to enter this trade based on this price action. You see that we have a previous candle that is referencing our support level here. So you see that we have a strong trend of up candles, but then we have this red one here. And this red one is fortified by this candlestick here. And then price comes back to this red candlestick. So if price violates this candlestick, it's gonna pick a fight with this huge candlestick, which it has to win. If it doesn't win this, then it actually bounces at the 38 or the 23%. So all of these Fibonacci zones are valid, but the golden ratio is a 61.8%, which is where price usually always bounces, but nothing is infallible. All right, so price came here, right? And then it bounced there. So you have two chances to enter the trade. And then here it retraced. If you like to scalp, you could scalp that. And then it came here to the 161 zone. And what did it do here? It actually stalled in midair within this trend. It just stalled at this area. And then there was some price action. You see that this candle is very big, which means that there were a lot of orders that were put in order to break this zone, and it was broken. And if for some reason you hadn't been on your trading desk for the past couple of days and only saw the action here, you'd want to enter here on this candlestick here, because this tail is showing you a Pinocchio nose that a lot of people have been lied to, have been trapped, and price is going back up. And this is exactly what happened at the Fibonacci zone. All right, so price continues to go further up, but where does it find resistance? It goes to the 261.8 zone. All right, so a lot of interesting price action happens here. So if you're here on this line exactly, you don't see a lot of action, but if you just move this, let's actually see how many pips is that, like 1 pip? Yeah, Yeah, just 6 pips away. So yeah, 5 or 6 pips here. You see that price really touched this zone, the 261 zone. And this is where it bounces, and this is where it retraces, and another trade ensues at this area. All right, so this is exactly how this tool works. And then you'd have all of these reasons to enter the trade just based on this tool alone and nothing else. Isn't that incredible? All right, let's find another example. All right, let's not even go too far. Let's actually see. Let's see what happened here. Okay, let's see what happened here. All right, so I'm actually gonna pick this area of interest here. So we have this high, we have this low, but then price went down. Okay, so now we're gonna put it the other way. We're gonna put the tool the other way around. So we put it from the low to the high, and then see the retracements. So what happened is this: the price came, and then it came past the golden ratio, but it came and bounced here at the 38.2 zone, which I said is synonymous with the 61.8 zone. So basically, it bounced here. And then you see these wicks, you would be able to enter this trade based on this price action, just based on this tool alone, just picking a low and a high, picking a high and a low. And what did it do? Price came exactly to the zone of 161.8, okay? This is exactly where it came. Then it went along after that. All right, but let's actually see what happened here. So this is where it bounces, right? And then there's an upsurge. So you have already made your money here. You've taken your profits because this is a take profit zone. The 161 area is a TP zone. So you don't want to give away your profits. You want to keep them. So price has an upsurge, and then it retraces. So now you're curious to find out if this is actually a retracement or if this is actually a reversal, because you can see that this trend line here seems like it means business. So is it going to hold or not? So this is a decision that you might have to make during the day while you're trading alone. So you'd put this tool over here. Okay, and then let's see exactly what happened. So price surges up, and then it bounces right here at the trend line. You see that we drew this trend line here. So it bounces right here at the trend line, comes here. Right here at the 50% is where the body ends, which coincides with the previous support and resistance. Support and resistance is the basis of all price action. So the body bounces here at 50. So 50 and 60 are so close together that you want to take your trades at these zones, the 61, the 50 area. So you could enter your trade at the 60 and put your stop loss at the 50. This is something that could actually help you. Sometimes you could actually place your stop at the 38. But price actually comes here and licks the 38% retracement, and it shoots up from this zone. But before it goes back up, it bounces again at the trend line, bounces again at the golden ratio, and then shoots back up. It goes past the 127. It even goes past the 161 zone. So you'd anticipate this because this is a strong trade, because it broke this area. It broke this physical barrier, this trend line. So you're like, all right, fine. So there's a lot of steam because it's breaking stuff. So it breaks one area, it breaks another area. The 100% was broken, right? So it breaks 1, 2 areas, it breaks 3 areas, it breaks 4 areas. But before it actually goes all the way up, it comes back and shows reverence. It comes back and shows reverence a few times to the dawn and says, "Oh, I'm sorry, Godfather. I should not have broken all of those promises." And then it comes once, twice, thrice, four. It comes so many times back to this same zone just to show reverence. And then it goes. Why does it come back to this area? As you can see, this area that it came back to is actually is none other than the 161.8 zone, which is the golden ratio. The golden ratio plus 100%, right? This is what it is. So it comes back here to the golden ratio. And then it goes, and where exactly does it turn? To the pip? Where does it turn? It turns at the 261.8 zone, which is the golden ratio. Okay, and this is where price collapses. So this tool is so incredible, right? And I like things that are interesting. So this is very interesting. When I first started trading, I used to see some articles about the Fibonacci tool, and then I actually always used to think that, man, I don't want to trade with things that are so complicated and stuff like that. So I actually ignored it until one day I was just going through my charts, right? And then I'm like, all right, fine, let me just try this thing out. And then bam, it was just like a light switch turned on, because I was able to see so many connections that I wasn't able to make otherwise. So the Fibonacci tool is very simple to use, as you can see. All right, let's just go through one more example before I let you go and try this out on your own. All right. All right. So let's look at this movement. So we have a low, we have a high. Okay. So let's see what relationships we have with this tool. So here we go. Here we go. So we have the wicks, okay? So we have the wicks here, and all right. So in this case, price came to the 100%, bounced at the 50%, bounced again at the 50%. So you want to look at these two areas holistically as if they're identical twins, or even non-identical twins, I don't know. But these two areas, the 61 and the 50 zone, are where you want to place your trades, basically. So usually you'd see that the price will also have an area of support and resistance. In this case, this area of support is very good for this trade. Okay, and all of this price action, this is an accumulation zone of supply and demand. Okay, and there was a lot of demand at that zone, and this is what we have. You see, this area coincides with that area where price bounced. So this is how trading works. And so the price in this case did not actually stop at this zone, but it actually just blew past, but it came back and showed reverence to the dawn again. So you cannot ignore these levels, or if you do, it's to your own detriment, because when price busted this area, it came back later on to say that, all right, this is what we've done, and here's some tribute. So it gave you some money just because it busted this very important zone. And this is where it continued to go. So it actually made a couple of other pips in this trade. We see like close to 100 pips. So 100 pips is a good trade, right? But had you taken this trade here, based on the factors that we just described, then how many pips are we looking at here? All right, just to the top. Yeah, we're looking at about 300 pips, so thrice that. So you'd be able to also trade this, although all of this cash would be something that you're just watching pile up. And let's see if there are any relationships here. So price moves in all of these different dynamic relationships, and I really believe in keeping everything so simple and not stressing yourself out too much. All right, so again, price came to the 38.2 zone, and then it bounced here, which I said is synonymous with the golden ratio. So it came to the golden ratio, which aligns with the previous level of resistance that turned into support. And then it busted this area, did not even come back to the previous zones here. So you'd see that it's a very strong trend when this happens. So you want to load the boat, especially when this candle happens, and then boom, see this huge candle breaking all of these zones, So something interesting actually happened here. So this is called a confluence zone. So this is when we have this Fibonacci tool aligning with this Fibonacci tool. So this is the 127 zone. This is also the 127 zone, and they're all aligned. So this is why we have an extraordinarily huge candle here in the middle of nowhere. We have this huge candle because we have a confluence of two Fibonacci zones, which need a lot of energy in order for the bulls, in this case, to pulverize this area and go further up. So this is exactly what we see, and price busted this area, tried to come and console this this area, but it only managed to console this one. But in the end, we would find our take profit from this price action here. So we're trying to find we're trying to find a lot of information from a little bit of price action. So this area here is the one that gave us our take profit. So there was a double top at the top, and this happened at the Fibonacci zone right here. Okay, right here, double top, boom, collapse. And why did it happen here? Because it's a Fibonacci zone. So all of these relationships are derived from this huge Fibonacci zone, which created these Fibonacci zones. So they're relationships within relationships, trades within trades, but this tool is indispensable if you want to start making real cash in the markets in a simple and very easy way. And right now, what I've just gone through are just examples of how easy it is to find trades using this tool. All you need to know is highs and lows, and highs and lows are the basis of support and resistance and all price action, right? When you're doing price action trading, you're looking for highs, you're looking for lows, you're looking for candlestick formations. So you wanna join all of this information and put it into a single place where you're able to trade with higher probabilities, higher certainty. So this is a great tool that you can start using right now, and I hope that this will really benefit your trading. And I hope to keep on giving you great videos with useful content that you can start using. So just subscribe to the videos so that you won't miss a beat and you won't miss a dollar. I'll check you out very soon, and all the best in your trading. Thanks a lot.